Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Friday, June 28, 2013. Thank you all for tuning in this morning. We're going to jump right into the S&P 500 E-mini future chart. And what you're going to see here is that the futures were trading sharply higher, but now they're only higher by about 1 point. They have come down pretty decently, so we'll see how this plays out today. Generally on a Friday, as you know, we normally will expect a flat to slightly positive trading day. So far, this has been a Viagra market over the past week, surging right back up after its sell-off last week. So, again, the markets seem to be holding up pretty well today. You see a little bit of a stall out, but nonetheless, the markets have been pretty strong in the recent days. A couple of things we want to take a look at. One is the Asian markets. You'll notice that Asia last night was up pretty strong. You had the Nikkei 225 index up 3.5%. That's a big move. Then you had the Shanghai Composite, which is mainland China. That was up, I believe, 1.5%. And you had the Bombay Sensex index up 2.76%. So pretty good moves in Asia last night. Let's take a look at the Nikkei 225 here, and you'll see that that was probably the major mover last night, and I think a pretty strong move for the most part. So you got a big pop in Japan last night. That's telling us that the Asian markets are really not showing any fear. Risk is back on there, and we'll see how this shapes out. But ultimately, we got to watch how this pattern plays out over the next couple of weeks. I think with that big sell-off, this could just be a bearish consolidation pattern forming. We'd like to see a little bit more time. And again, ahead of the U.S. holiday, we're not going to expect any major declines. But hey, you never know what next week will give us. So, and if you take a look at China today, we'll go to the Shanghai. You'll see that was a pretty big surge. Oh, that's a Jakarta. I didn't mean to put that one in. Here we go. Okay. So you'll see that's a pretty big surge there, finally closing above that bottoming tail high. So you got to give China a little short-term upside bias at the moment, and so far it has been a pretty good move there. Now let's get back to the U.S. markets here. There's a couple of things that we want to go over real quickly. One is gold. Gold is getting hit today. Again, down another $14. So if you take a look at the GLD, which is a good proxy for gold, you'll see that the GLD today, let's get it over here, is trading down a little bit lower to around 115.80. It kind of got to that level yesterday, but again, it's right back down to those lows again today. So be a little bit careful with gold. The spot price of gold right now is around $1,198. Last night in Daily Market Report that I put up for the members, I did post a monthly chart max move calculation of where I think gold could wind up and where it should get a bounce. So if you're interested, come over to the research center and you could pull that up. That would be last night's daily market report from June 27th. But that's what we're looking at. You do have a host of news today. A little bit later, we're going to have the Chicago PMI. I don't think these news reports are going to be a big deal. You also have the University of Michigan June Consumer Confidence Report. That'll be out at just before 10 o'clock, I believe at 9:55, unless somebody else gets it first. But either way, they'll have those reports out. The one thing I want to say, you will have a lot of Fed governors speaking again today. So I believe at 8 o'clock this morning, the Richmond Fed President Jeffrey Lacker was speaking. You'll also have, I believe, the San Francisco Fed President John Williams speaking this afternoon. So there's just a lot of Fed speak this week. I've never seen it quite like this, but one little decline in the market and everybody is revolting against Bernanke. You have to wonder if it's all staged, which I kind of think it is. If we go down, the markets fall, everybody gets out there and say, hey, we didn't mean what we said. But this is what we're getting. And the more they do this, the more, in my opinion, the central banks start to lose credibility. Something you want to keep your eye on today will be the yield on the 10-year note. That is very important. Right now, the yield is around 2.49%. So keep your eye on the yield. The yield is going to really tell everybody a lot, tell you what you need to know. Right now, if you just take a look at the yield, it has fallen and sure enough, as it's fallen, the markets have caught a bid. But if yields start to make their move back up, and I suspect at some point they will, that is going to be a big negative for the stock market going forward. Also, if you look at the dollar-yen chart, you're going to see that the dollar-yen has really been roaring and soaring, and this has also helped to lift the markets. Look how the dollar-yen on a daily chart has just continued to move higher. This has taken second fiddle to the yield, but nonetheless, if the dollar-yen chart goes higher, meaning the yen is weaker against the dollar, this is beneficial to the overall stock market, especially beneficial to the Japanese stock market, which did crash, a couple of weeks back. So that's what we're seeing here at the moment. We do have some gap plays out here for you today. BlackBerry, Research in Motion, just getting absolutely annihilated. We do have some levels for Research in Motion for bounce plays. So come on over to the chat room. Those will be posted at 9 a.m. this morning. I also believe Accenture, I think it's ACN. Yeah, there we go. This one is also getting hammered. We'll have some levels for this one as well a little bit later. So you want to watch for those. We will have some gap levels for those equities. They'll be posted up in the chat room right at 9 o'clock in the morning. I think that's pretty much everything that I wanted to cover today. On Fridays, I try to keep it short and sweet. The one thing you want to watch for is that generally on a Friday, we get a flat to slightly positive trading session. So, keep that in mind. You don't want to really look at the downside too sharply, although it can every once in a while sell off on a Friday or Friday afternoon. But generally, the market will hold up. It will be a flat day going into the weekend. Remember, central bankers need people to spend money if all of this quantitative easing is going to work. So nobody wants to see a down session on a Friday before the weekend. Just think about when the person at works a 9-to-5 job turns on the evening news and sees the Dow Jones down 210 points. They're not likely to go out and buy a new swimming pool the next day. So that's how it kind of works. Again, we'll see how this all plays out and shakes out. But nonetheless, futures right now are flat on the session, and they're holding this little 200-period moving average, and we'll see how long that can last. But either way, flat to slightly positive day for the most part. Next week, you got to be real cautious during early part of the week, and then we'll see how this all shakes out. With that said, everybody, I want to wish you all a great trading day, and we'll see you on the charts.